Hello, thank you, Scott. Hello, Andy.
Hello, Steve. Hello, Scott.
Yeah, hey, everybody. Welcome to a short week with yesterday being a 3-day weekend. Monday is now our Tuesday, so to speak. So, first webinar of the week kicking off here. Thanks for tuning in. Let's get going. Obviously, the first trade is always our disclaimer trade. We're a software as a service provider. We're content publishers. So anything you see or hear in this webinar today should not be construed as investment advice. If you need specific investment advice for you or your family, you got to go to the registered guys that took all the exams and allowed them to charge you guys a fee for that. So we're going to talk about the software and some things that I'm seeing mostly. And Andy as well, and let's get started. So, quick reminder, the 2018 Trade Ideas Summit is going to be very good. We can already tell the way the momentum is building for this one, and last year was a success, so this year is going to be hopefully beyond a success, especially when you consider it's in beautiful downtown San Diego, about 30 stories above the water and the downtown area. It's a great venue, the University Club. We've got some great hotel rates. For people who want to come down and meet and press the flesh and say hello, there are still tickets available. So this is the link at the very bottom of the screen. Scott will certainly have some more information towards the end of this presentation, but the lineup here is stellar. Last year, we were lucky to get Brian Shannon as our CEO. Well, this year he has to step aside because willingly on his part, he recognizes that Brett Steinbarger is a keynote speaker caliber. Across the board, very, very well-known caliber speaker, focuses a lot on psychology of trading. So if you're struggling with emotions and psychology of trading, this is the guy you're going to want to cozy up to if you come to the event. All right, you're not alone with our vibrant community of traders. Always we talk about the live trading room over here on the right. That's a screenshot from Barry Anderson's room. There's 500 or 600 people in there on a good day, and it's a great way to learn, especially if you're new or even intermediate, because there's a handful of wonderful traders in there, and the group really stays focused. Barry does a great job of keeping a lid on the insanity and staying focused on what's at hand, which is trading and trying to find opportunity, but also showcasing our Trade Ideas software platform in live form and helping people with any real-time questions or technical support issues they might have as well. So over there from bell to bell, Monday through Friday, and the best part is it's free. And I guarantee you Barry's giving a pretty good run for the money of people who host other rooms and try and cover their expenses with like $99 a month. This is just as good, if not better, and we're very proud of it. The 4 afternoon webinars, well, that's where we are right now, 5 o'clock Eastern, Monday through Thursday. Myself today, and I'm sorry, Brad and Dan will be hosting tomorrow, always giving us a peek around the corner at what's coming next with Trade Ideas. And then Andy will host his content that he has prepared for you on Thursday after market, 5 Eastern. And then at the bottom down here, it says Friday support sessions. Just know that anybody can come by from 11 to 2 Eastern. Same format as right now, the GoToWebinar format with the questions and answers and sharing of desktops. We'll go anywhere you guys want to go and talk about. Free open hours of come one, come all, and you guys set the direction of the content. We'll do what you guys want to do within reason. We don't have a lot of brokerage plus support in there, but for the rest of the stuff we can offer, that's a great place to stop by and get some good watering hole information. And then lastly, I'll go to the next slide. TI University is a way in which we're getting our new users up to speed as quickly as possible. It's a 4-day course. It starts every Monday, finishes on Thursday with the advanced 401 class. We also have these recorded if somebody wanted to request them. We'll give you an email at the end of the webinar to request the recorded versions, but it's 90 minutes each day, so 6 full hours of hardcore get up to speed quickly question and answer format, again, like we're doing right now through GoToMeeting, GoToWebinar. Come in and ask the questions that you want, but we've got a pre-tailored content tree for those 4 days. And all of that combined gives us a great net user subscriber growth that we're very, very proud of. So let's get into it. As always, my weekly theme is man and machine, or human and machine. And the way the quote goes from Paul Tudor Jones, which, by the way, Dr. Brett Steinbarger was employed by Paul Tudor Jones, a wonderfully smart hedge fund operator, and they ringed Paul Tudor Jones. They ringed Dr. Brett Steenberger as much as they could to get as much psychological psych coach. We'll call it psych coach. So Brett Steenberger worked for these guys for a good 3 or 4 years exclusively. That's a really impressive resume. So another feather in the cap for our keynote speaker coming up. But I'm not going to go into the IBM Watson and the oncology dissertation again. I just want to remind people that, again, no man is better than a machine, but no machine is better than a human with a machine, and that's us. And like I said last week and the week before, that's also IBM Watson in the oncology department. Really impressing all the oncology researchers. Was Watson giving them the definitive answers? No, but Watson was giving them a nice curated list of wonderful DNA sequenced cancer treatments based on each patient's history and DNA makeup. So it's a great example, real quickly on thumbnail description there, of how humans work with machines. And going forward, guys, this is the world we're going to live in. I mean, there's going to be a lot of jobs that are taken, but a lot of jobs are going to open up, basically manning the machines and curating the data that they're returning back to us. So that's what we do on a daily basis here with Trade Ideas as the machine, and curating the ideas and giving us a better universe from which we can have some good ideas and probabilities. So today's class is going to be very much chart focused again, and current stocks. Not too much trade ideas stuff, kind of getting away from that a little bit because we're doing so much of that in the TI University and the Friday support sessions, the how-tos and the nuts and bolts of trade ideas. I'd like to, kind of continue to steer this and focus this in a trading educational environment. So today, I'll take a look at the market recap and just kind of let you know what I see. Today's Holly recap will be done again by Andy, but it's going to be a short one because there wasn't much to glean from Holly, but in retrospect, there was some things to glean, and Andy will explain kind of what I'm talking about on that. The trade of the week, which is the focus of this webinar, ALRM, coming off of the same scan that we've used the last 3 weeks in a row. And I've got some updates for you on that scan. We will pull it out and look at it again together, because I got some good news that the composite rating filter is going to be coming out of production a lot faster than I think we had hoped. We were able to do a good job and get the developers to realize the importance and priority of getting this filter that everybody seems to be wanting, and I don't blame them because it's been working really well, and we're going to go through it here in the second half of the webinar. We'll check in with last week's price alerts, which once again was a door prize last week that we gave out, and they did pretty well, so we'll go through and look at those. And then I'm just going to keep going with what works until it doesn't work. We're going to set some more price alerts that I derived from either Holly or the composite rating scan going forward, and we'll set those alerts and hand them out so everybody can use them in real time using the cloud feature. All right, I see a quick question. This is for stocks. So Leonardo, unfortunately we don't do Forex. This is equities in the US market primarily, and some of the Canada markets as well. So what we're going to do is just kind of jump right into the first item, and that is the market recap. So we'll start where we always start, using the SPY ETF, because that tracks the S&P 500, and that is hands down the benchmark index that all of the fund managers and financial people use as a bellwether to measure their performance against the S&P 500. So here we are. Just 3 or 4 days ago, we were in all-time high territory. And I'm pretty sure, if I recall correctly, I had mentioned we had a really nice push and 3 or 4 closes above this orange line. It's probably time for some sort of pause or a breath pullback. And that kind of seems to be exactly what we have today. And a couple other interesting items. I had said, ideally, that little gap right here would be a nice opening bell flush, where we get those crazy, which I've got a chart for you later in the day. Andy's going to love this one. We did not get a fill. I was kind of hoping maybe we'd get a gap fill, but we had not close enough, but we had an attempt to fill the gap. The low there is 68 cents, and the low today was 68 cents. So we matched this little candle right here and bounced right off of it. The intraday chart shows us bouncing off the lows, which was right there, and moving higher. So in the daily candle scheme of things, it looks as if we got our 3 or 4 3-day pullback, and we bounced right on cue, not so much in the gap fill, which I was hoping for, to get a clean pull back and fill. It's always nice to fill those gaps just to rule them out going forward. But notice how it did bounce off my favorite indicator, the 10-period simple moving average, the average that finds momentum and keeps those stocks in momentum and then tells us when they are no longer in momentum. Well, bouncing off of that level today after 2 days of pullback and then closing at near highs on a nice kind of a doji there, pretty close to a perfect doji, Christian cross. The bouncing support came right off that interesting level. So I would give this close today a little bit of credibility for the 2 or 3 or 4 days pullback that I was clamoring for last week. The thing we didn't get was the gap fill. But today was decent enough. We tested that low, didn't want to go anywhere below it. I think there's probably a good reason that 10-period moving average was right there holding the price action as well. So I'll say it again, there's absolutely no bear case to be made looking at the footprints in the sand. Now, surely, of course, we can start breaking down fundamentals and economic data and housing prices and whatever you want to do, but we don't do that here. We focus on price action and only price action because price action will precede the actual story that eventually does come out. So technically, no bear case in sight. Would have been nice to fill that gap, but today's action basically recocked the trigger, and we could move up higher out of today's low. That's what the S&P looks like. The Qs, on the other hand, are still above their rising 10-period moving average. They did not come back and fill this gap at all. We had kind of an exhaustion candle here 3 days ago with that wick and that doji after a big move up. And then a day of rest, a little bit of pullback today, and then bouncing off of lows with a bottoming tail going into the close. Again, very constructive action here today. Maybe we get one more day of pullback. I don't know, but sideways to 2 or 3 days backwards or sideways is typically can be enough, for another push higher. We'll see, but we are up here in no uncharted territory. Just 2 or 3 days ago, all-time highs once again in the Qs. So no bear case to be made over here. The IWM, the Russell, is a bit more defined in what it's doing here. You can see it was kind of moving higher and then just slowly slogging higher with the rest. Never really had a pullback, but some sideways action for the most part. And then today it tested that fanned out 10-period moving average. Here's the 20 and here's the 50. Those are the only 3 I use. But this is very typical, and in hindsight, this can be a neat little place to imprint in hindsight, being 2020 as a good entry, because we tested that moving average there intraday and there was no close below the test. If there was a close below that moving average, I wouldn't be talking so much about this, but a nice test, push back up and close above the key moving average. This moving average in my book will stay in motion and stay relevant until the price action closes below it on an upsloping one, in the bullish case, that is. So we got a test and then a nice passing of the test as we bounced back up into range here. Still a nice sideways action. There's a case for this IWM to try and maybe sneak away from the station. It's not pulling back. No bear case to be made there. Oh, and this is a rather pretty chart. Look at this, Andy. The Dow is giving me everything that I wanted all in one. We got a nice gap fill. Yeah. We got our nice gap fill on the tail of today's candle. And we just popped right back up and closed right above the moving average, which is above the 20 and above the 50 after 3 days of pullback. That's like kind of 1, 2, 3 right there. 1, 2, 3 pullback on days, fill the gap, give us a bottoming wick. Now we might have a base camp from which we can move higher here. Guys, all 4 indices are giving us no reason to even throw up a caution flag. It's just, how many days are we going to consolidate, and how many days are we going to push back up until further notice? That's basically what I'm seeing. Is that what you're seeing?
Yeah, pretty much, Steve. You hit the nail on the head. There's no bearish case. I mean, you can still possibly get that gap fill in the spiders.
Mm-hmm.
That time will tell. But wow, these are all very good setups in all 3 major indices there, and see what happens. Typically, when you're talking about a momentum stock, obviously this is not a momentum stock, but when you have 3 days of pullback like that, and then you do take out the prior high, which would be today's high tomorrow, then maybe you can get some momentum. You will see. Like I said, time will tell. But yes, I mean that we're still in jeopardy, because we haven't had a bar reversal, and nothing's etched in stone that we're going to take out that high tomorrow.
Yeah, what Andy means is here's a high, here's a lower high, here's another lower high, and today was a lower high still. So there's
Mhm.
4 days of a declining highs, giving us a tiny little minor downtrend. So therefore the thinking is when it takes out the first one of those highs, which would be today's high, that's where you could put that orange line is where you could, in effect, put a price alert. And if that thing goes off tomorrow, maybe try and work the day with a very bullish sentiment until, things change. But if that does take out that bar reversal of today's high, my experience says watch out, short sellers and bears, because we might have another push.
Mhm.
All right, so that's that for the market recap. And again, no bearish case, just moving higher, and it's kind of been the case for the last few weeks here. And gosh, that's when we get to the trade of the week section of this webinar. It's going to be kind of all good because the backdrop of the market is being very conducive to helping a nice trade of the week to the long side move higher. If we had volatility and sideways action for the last 3 weeks, I don't think we would have as good of a trade of the week performance as we have had. So it always starts with the backdrop of what's happening in the market, and that's why I like to start, my webinars with these market recaps. So it just kind of sets the tone.
Mhm.
All right, well, we can move on to Holly now.
Okay.
You want to take it, or you just want to look
Sure,
at my
sure. I'll
screen?
just take it. I'll just take it, Steve. Let me just grab it here. All right, so this looks a little bit different. I just kind of expanded my window so we could make sure we got all the trades in and the trade counts. Getting back to the spiders, guys, let's take a look at just what we were kind of talking about. And thus, it's kind of making it hard for Holly, and that's the reason you're kind of seeing the mixed bag of tricks in over here as far as our risk off and risk on, and negative figures here, positive figures in these two. It's just the market that we have, and kind of keep this in the back of your mind, guys. I mean, what Holly's going through, and this has been like about 3 days in a row now. Well, what we had an overextended market, a nice little run in the spiders you're seeing here, and we just got overextended. And since this high right here, what have we actually experienced? We just talked about it, but each day it's been a gap down. So it's not even trading down to these levels, it's gapping and then kind of slowly bleeding in this case. Another gap down here and kind of slowly trended up. Not really a trend, just slop and then finished up. And today you had slop in a perfect doji. In other words, the price ended exactly where it opened today. And you can see the action today. Guys, and you've heard me say this over and over, this makes it hard for any strategy that you're trying to use in a marketplace when you just continuously get these new lows, new highs, new lows, back to near highs. It's very slop. And you can see it a lot of times in Holly. And a good indication of that is we talk about directional bias. Now, I got Holly 2.0 up here, which finished up on the day. And look, long strategies. Okay, so there you actually had a risk on that performed well today in a very choppy market, and that's that's not easy. Now risk off, didn't hardly do well at all, just barely finished up on the day, but we still like to see this because it tells us, hey, there's some ideas that are working. Okay, the one on the day, and I know a lot of people in the trading room caught it, was this ABUS. I do want to point out this because it was a beautiful trade. There's a trigger right there at 950, no pain trade. In other words, the trade goes off and it just moves higher from there. You can see the risk off got out for a 30 cent and 25 cent. Two strategies called this. It's what we also call double confirmation. All right, and only 10 cents apart. So when you have two strategies calling a trade, you might want to pay special attention to that, because that means we have two strategies that both made the cut with different configurations that are calling this trade. So even though they're similar in nature as far as they're contrarian, they're pulling back, these are still totally different parameters. And
Wow,
when you see
only a minute apart too.
yeah, very close, and a nickel apart and a minute apart. Steve's right. And there's some that didn't work. A couple of own supports down here just kept bleeding right through. There's an example of one, and there's an example of one. But I also wanted to show you, I just don't want to show you the best strategy. I want to show you Holly Neo. Here's another one. Not as many alerts today, but still performed pretty bad. Risk off and risk on. So not a lot working in there today. Let's go ahead and take a look at the Holly Grail's, the last one. And we have 16 trades in this one. And look at here, you got a mixed bag of long and short. So there's no way to infer any type of directional bias, no matter what happens in this, because where would be your directional bias? To the long side or the short side? Now, if all the shorts performed well and all the longs performed, we have seen this before, performed poorly, then you may have directional bias. But this is just a mixed bag, and you know, it's all going back to the point, guys, and this is what I think you can take from this, because I've seen this before, you know, with Holly, is when the market is kind of slopping around like it's done the last 3 days, after, you know, hitting all-time highs, you know, this is maybe when you want to pull back your trading, you know, when you see this in the future. Okay, when you, after a big move, let's say you had some winning days, and trust me, Holly had a lot of really good days during this stretch. Maybe you want to think about, hey, Holly's not starting to kind of perform erratically. You know, you got risk on and risk off showing up as the best performance. There's just no continuity here in any of the strategies. Well, you know, I know I'm speaking 3 days after the fact, but I did mention the same thing on last Thursday when I talked about Holly on this day right here. This is when, guys, after you've had a good stretch, maybe you want to pull back your trading, okay? It's tough on Holly. I promise you it's going to be tough on anybody, no matter, like I said, no matter what strategy you're trying to use. Maybe this is a time where you should focus on 1 or 2 stocks that had news item or earnings or something like that, where you can focus on your trading instead of being all over the place. But that's my take today from Holly. Steve, I'm not sure if you had some more to add.
Well, yeah, I mean, I was thinking just kind of a 1 or 2 sentence here. Holly is, for lack of a better word, comparison, expression, she's our canary in the coal mine. And was she swinging on singing and whistling today? No, she was kind of staggering around a little bit, the cage, trying to find off the perch, trying to find, and that, you know, that's, you know, I make a joke and I make a visual, but that's really the bottom line. That's the takeaway, is that the statistically perfect, non-emotional trading bot was not seeing it today, and so we got to use that information and translate that into our own methodology.
Yep, very well said.
That's all I had.
And likewise.
All right, so I'll
pass it back over to you. Are you grabbing it?
I got it.
Okay.
All right, welcome back. Let's see what is on the docket next. So now we're going to go to the trade of the week, ALRM. So let's go ahead and just talk about the last 3 weeks together. Has been a pretty good string of the composite rating filter, which right now is a custom formula. And well, one of the reasons we're not handing it out as a custom formula is Andy and Michael and Dave May put a lot of time into this. So it is a definite proprietary formula to trade ideas. And so if we gave the custom formula out, everybody could reverse engineer it. Secondly, it's not efficient for us to have custom formulas because those have to be done manually and added to your account and whatnot. So here's the good news, guys. I basically went to the production department and said, this composite rating is killing it. You know, the trade of the week is working again for the 3rd week in a row off of the same scan, and people are asking for it. So I don't know how much longer we can hold them at bay, guys. So we got the good news that hopefully by the end of this week, we may have a bona fide filter where you can come into any top list or even any alert window, and in the search function, it'll be called something, I don't know, composite score, but you'll type it in. Right now you can see there's my composite score, guys, but U14, this signifies this is stuff that we're doing proprietarily behind the scenes using the custom formula. So it's ready to go. We just got to get it polished up in a format where it's not reverse engineerable and everybody can have it starting from scratch. So that's coming very soon. Yes, Waleed, I'm happy. I told those guys they got to up the priority and they listened. So we're happy about that. So on the heels of that comment, here we are, the 3rd week in a row, talking about taking a scan from the composite rating. And Andy, why don't you just real quickly give them a few ideas of what makes up that composite rating and why it's better than IBD's composite ratings and things like that.
Oh, absolutely. Well, keep in mind, I'm going to be kind of vague in a lot of stuff I'm talking about, but I will tell you this. It does make up more than 15 metrics. Majority of the metrics are technical in nature. I would say on probably about a 3-to-1 basis. technical to fundamental. But we thought it was very important to add some fundamental data. Otherwise, we're just looking at charts. So there is some fundamental data in there. Without giving too much away, I'll just tell you the kind of stuff that's some little cash debt fundamental, some growth fundamental are in there, and a couple of others. But like I said, I don't want to give away too much, and I hope you're not going to show our formula there. Okay.
No, I thought about it, but then I thought, now they'll pause the screen on the replay and they'll be able to see it, so I can't do that either.
No, you can't do that either. But listen, guys, trust me, you'll get time to look at it and stare at it, and you'll probably have a good idea, when you look at it, kind of what it's looking for. The beautiful thing about this is we do lean more toward the technical metrics versus like IBD does pay a lot of they put a lot of strength on the recent earnings and things like that, but earnings to me, technicals are more important than fundamentals. And another beautiful thing about I was watching a trade the other day at Holly. It was a short on I can't remember the stock, but I think it was Dick's Sporting Goods is what it was, and it was a short, and I'm sitting there watching the composite rating, and I looked up and it's at 71, but then I noticed the stock fell below a certain moving average, and the composite rating ticked down. It's just beautiful to see it in real time, because I know there's a lot of other or not a lot, but there's some services out there that have a composite rating, but boy, they change theirs like weekly, and ours is going to be in real time. So you're getting, obviously the fundamental data is going to be when it's released from whatever, but all the technical stuff's in real time. So it's beautiful. Yeah, like Facebook the other day when it fell off the cliff after earnings, it went from like a 100 composite rating down to like 50, in a matter of overnight, because hey, it broke down technically. Whereas, some other ratings out there will, after that gap down, will still be showing it as a very high rating. We immediately reflect the current technical breakdown and give you a score that you can actually use and put to work. So it's gonna be good stuff. All right, Steve.
Very cool. So I was just kind of tweaking this a little bit because TCMD was one of our trades from a few weeks back. And it's not on there anymore. I'm pretty sure it's probably the average daily volume has dropped it off, but it should be on this if I were to drop the volume low enough. So there's 3 weeks ago in TCMD, a beautiful chart. Look at that 10-period moving average, guys. I don't just talk about that because I like to. It works many times, and a beautiful example right there. Sideways action, and boom, that 10-period moving average kicks the price higher. So that was on there at one time. It's not on there at the moment, but I'm not going to try and reverse engineer it to make it come up. Last week, WWE, look at this, a composite score of 99. The best you can do is 100, and I don't even think we see any of those, do we, Andy? Or is it 99?
Today?
Can you have a 100?
Yes, I have about half a dozen of them.
Okay.
It might be. I know what it is, because you were sorting by float shares, and I'm not.
I was sorting by, well, now I'm sorting by composite score. So the highest I have is 99, but I will also, and one of the reasons Andy's scan might be different is because I have added the short float percent, and I've colorized my gradients there accordingly, you can see. So what I really want to know is how many of these stocks with great composite scores between 90 and 99 or 100 show up with a high level of short float, and we get some here as well. So we're going to come back to this list, but WWE was on there last week, and it's just still tearing away. This week is the one very close to the top is Alarm. Okay, Alarm had some nice movement. I always like these. We're in that time of the year where you can see the good stocks that had good earnings that didn't give much price back at all. A lot of times you'll see earnings and then they just give that price right back in 2 or 3 days. But the gap held, didn't even try and take it, moved higher, and then pulled back. Got a little wishy-washy at my 10-period moving average, but on Friday of last week, we popped back above it and closed above it. And here we are. We're now in the money. The trigger was a bar reversal off of Friday's highs with the thinking that we're going to run up here and probably challenge this level tomorrow. We got super close today. You can see that. So guys, expect some selling to come in at these levels, But what we're hoping for is a nice volume surge and a push higher and eventually a close, hopefully, knock on wood, a close higher tomorrow above this orange line. And if that's the case, then this trade remains completely hooked up, as does WWE, as does TCMD, all three from the same scan. Now, again, Andy's using the scan a little differently. I've got a short float component in there. I've got some different filters, but that's the beauty of it. When this thing becomes available at the end of this week, knock on wood, pray, we all will be able to use this in our own method, in our own style. So, guys, there's not much more to say other than you want to stick with what's working and stay with it until it stops working. And then you want to be a quick student to realize, hey, this stopped working, and move on to something else. And don't become that Albert Einstein example of insanity. You keep doing the same thing, getting a result, but expecting a different one. So yes, all right. So that's it for the trade of the week. So let's do this. I'm going to keep.
Let me add one more thing, Steve, to that composite rating, because I think what you're going to find out, guys. Obviously, we're close to all-time highs and in the major averages, and there's a lot of stocks in there, right? Because technically they're scoring real high. Yep. I think what you're going to find out, you're probably going to be getting this just in time, because eventually, when we do have a pullback, a good pullback in the market, it's going to be interesting to see what stocks, can remain, at these high levels.
The cream will remain strong. It'll be a nice relative strength index, is what it's going to turn out to be. And we'll find out which ones are holding on with some good vigor and strength. All right, so let's keep that top list window open. And again, I like the way the colors line up, so I'm going to sort it the way it's designed to be sorted, which is by short float. And let's go down here to last week, just a quick rehash. So this was last week, and I also included ALRM as the trade of the week, because that's also given out, before the open. We gave these out like we did the week prior. Last week's had a great return, and this week is working good again. And again, I'm not going to pat myself on the back. It really does help when the wind is behind you and the market is doing what everybody wants it to do, continuing to new highs. Makes it a lot easier because there's really nothing easy about this. So looking at these charts, these were all derived from either the Holly end of day or this guy over here, my composite rating top list. And so as I just go through, we already looked at that one, alarm, Leviathan went through. So all of them went through and created some sort of alpha positiveness. There wasn't really too much, I think, in terms of sweating and pullbacks on these. So let's go ahead and clean these out. AWX didn't get anything going, but I wouldn't turn that one off, guys. I'm going to turn mine off, but you might want to leave that one on in case that thing comes back to life. And then this thing just fell apart, bled away from our trigger. And same with this one. We never got a trigger there either. So we're going to highlight and delete 8. And I've got my list ready to go here. So let's just minimize that. And we'll start with all of these I pulled from either one of the 3 Holly segments at near the close today. It's something that's a habit I like to get into, and Sean does a great job as well, just to kind of see some ideas that may not have been presented to you in other forums. But Holly found something intraday that spiked the interest of the AI, so let's just see what we can take from there. I'm not going to go into the trades, I've got them written down. So the first one from Holly is MPC. And here's our nice move higher, guys. Nice sideways action, 2 or 3 days of selling. Nice buy candle on Friday, bouncing back up and closing above. And look at today, the moving average held again. So this thing is making waves about wanting to dance and springboard higher off of these candles. Let's just put a high in for today, and if it follows through, we might get lucky for some follow through. So 85.09 is what we want. I'll just, the ones that I found on Holly, I will notate as such. The next one is ACXM. All right. Look at that dastardly candle back there. This one might be a little squirrely. Let's take a look at the average volumes of 50, almost 600,000. That's not too squirrely.
No.
But nonetheless, we had a really nice 6-7 days of sideways attempt to shake the hands, and we're going to have another one of these to look at. That's a bit more compelling than this one, I think. But the sideways action, here's our buy tag in the Holly today, and the moving averages, we didn't close below it. We tested it on this giant one, but still didn't close below it. Didn't close, didn't close, didn't close. So love it when I see sideways action. Love it when I see a Holly confirmation intraday, and this chart looks like it wants to move higher. So let's grab the high of today and put it above that by a penny. So we're going 46.40. 46.40, and we got this from Holly. Now again, guys, I'm going to give these out, so I'm going to go through them one by one and kind of talk about why we like them, and then we'll hand them out. What's next? RP. Now this one's going to be a little different. I don't think we've done one of these yet. This is going to be a pullback. I like this chart, but it kind of got ahead of itself a little bit. It had two nice green candle days. Maybe it's going to pull back to where it broke out from, which is roughly that level. I'm just going to eyeball it. We'll take today's low, 61.80. Let's go 61.78. 61.78.
Hopefully it tags that 10-period moving average when it does pull back. That'd be nice.
Yes, that'll be getting kind of close. But I'm using more or less this breakout period right here, where you're broken up from that green candle. It might return to that level, and that level might become support. So we haven't done one of these yet, so we're going to say pullback alert. Now this is, look how it's coding it, guys. It wants to go short because the price is below me. We don't want to go short. We want to go long, so we want to code that as a long, have a pullback and catch that trigger. Then we want the buyers to step in at that trigger. So pullback alert from Holly. The next one is RDFN. All right, this one had some bad news. It's in a downtrend, but it's fighting. All right, it's fighting to get its gap back. All right, we went down, tested new lows for a few days, bounced back up. Basically, if we hit the high of that candle right there and mark it up, we're seeing what's happening here in the resistance of this particular stock. Therefore, if we can get the price to continue to go sideways and push back higher, we might get a nice gap fill in this type of trade. So I'm just going to go back to the highest point. That's 23 and 27. So we'll go 28. A penny above 2028. And Holly, parentheses, gap fill, question mark. That's our thought. All right, so that is it for the Holly trades. Now we're going to move on to the composite rating scores. And everything is on this chart, on this scan. I'm just going to pull them off my notes, though. Target has been a great one, all right? And once again, look at the sideways action. We got everything intact here. We got the great earnings, no attempt to fill the gap, sideways since earnings, and now the fanned out moving averages are forcing. This honestly was on the short list, guys, for trade of the week. Since it didn't make trade of the week, we'll put it into our shareable alerts here. So the high of today's candle will be our trigger. 88.99 is where we're going to go. Oops. 88.99. All right. Again, imprint on that visual, guys. Beautiful chart. Moving averages 10 on top of the 20, the 20 fanned out on top of the 50. Price action tries to mess with that moving average down here and can't close. We got our earnings, didn't give anything back on the earnings. Sideways action is always good as the price, as the slope of a ascending moving average comes up to meet a sideways action after a gap that can't be filled. This has my interest every day and all day, so that's going to go on the list as well. iRobot, you guys can see that at the pretty much near the top of my list here. This thing has a giant short float, and it's got a nice looking chart too. Holly saw something back here, continued to go higher. Well, now we're talking about the last 3 or 4 days, sideways, a little bit of back action, tested that moving average and popped right back up with a nice candle. Now, the shorts, there are, how many of them in there? There's 52%. I don't have the float in here, but that's a pretty good short squeeze if this thing gets any higher. So where do you think we would set this one, Andy, today or Friday's highs?
Yeah, that's a tough one because Friday's highs, you got more congestion, but
right.
Yeah, it's I would just go ahead and set it at today's high, probably either that or the all-time high, but then it's extended.
I'd rather get an early look. I think that we have to trust the trend, we have to trust the moving average, and we have to trust the consolidation, pullback, and a nice bounce off that moving average. So today's high was 62 cents. We'll go 63 cents. And this was I didn't put notes on the last one, but composite rating, T window. I mean, this thing has a score of 99, yet 52% of the people haven't figured out why they're still short this thing because it's so strong. It just makes no sense. So we're going to exploit that. SAVE, S-A-V-E, is also on that list. A very nice trend indeed, but look how it's going sideways now. This moving average probably will come up to catch it, but we've got at least 3 or 4 days of really nice defined highs. 85 there, 88 there, 88. So we're going to go 89 and hope that the sideways action in this thing creates more upward momentum. What is the short float is only 15% on this one, so it's on the lower end. Okay, this is the fun one, Andy. Ready for this? I think it was BCRX. Look at what those buggers did. See that gap down here? Somebody wanted to fill it. Well, you've heard me talk an awful lot about running the stops on the opening prices. Exactly what happened today, guys. Stock gapped up, and then slammed from 740 down to 599, and then back up to 556 in the period of 15 minutes right on the open. Stocks don't trade like this, guys. No. Human beings do not trade like this, guys. This is just a bastardization of our defunct high-frequency trading and algorithms. And so this is the hallmark of algorithms. Now, all that aside, once we see this, we can't change it. We just have to accept what it is. A lot of times these are done to kick out the weak hands. And boy, look at that. They took that price all the way down to the gap on the daily chart and then all the way back up and then broke out. I knew you'd like this one. Broke it out of that range on the same day. That's just dastardly. It's criminal, but we weren't involved in this, but now we see the footprints in the sand as to what happened to these people. Typically, there's some more meat on the bone here for a few days, so let's just pop in a new high, 763, and see if we can get some perhaps percent movement on this one in an under $10 stock. CRT window. All right, so that is the ones that we've come up with. Let's take a look at what we got, and then I'll share it with you. Price list, price alerts. All right, 1, 2, 3, 4, 5, 6, 7, 8 price alerts. Let's go ahead and edit this one so we know where we got it. CRT window. Now we have notes in all of them. We're all set to go, working alerts. So we will highlight the 8, right click and share all 8 price alerts. We go into our cloud code configuration, copy all that code. Now guys, whoever wants it, I'm opening up my chat window and I'm typing in price alerts and copy paste. That right there is the cloud link to place all of these working alerts into your price alerts. And so they will go off and trigger for us all together at the same time. And maybe we'll meet again a week from now and have the same conversation. Hopefully the market's still moving higher and these long ideas will continue to play. Somebody was asking a question. I think I saw it.
Yeah, it was about the swings. He wants to know about the swing stop.
Well, the swing exit. Okay, what is the swing exit, smart stop on these charts? Okay, very good. So let's go back to, let's say we get a trigger in iRobot. Well, these intraday color bands that you're seeing, they're primarily for intraday, not swing time frames, but intraday quick hit time frames. And it's always going to be calculated and predicated off of the current price. So in iRobot here, into the close at $114.11, the system is looking back in time and using a risk analysis approach and using pivot levels and support and resistance and volatility and true range, a lot of secret stuff to come up with this. All it's saying is this color band right here is where you would want to cut the stock intraday if you were trying to hold it intraday for a day trade. Up here would be a nice intraday profit target. So no matter what stock I'm always typing in, we get a nice recommendation. Tesla got beat up today, so it's basically saying if you go long down here at these levels, a very nice tight stop is going to be the low end of that color, and it looks like the profit target isn't really giving us a lot of risk reward here, so you might want to stay away from that one. But that's pretty much what it is. Okay, Risk on and risk off is the same trades, but if you add them all up together at the end of the day, risk off is going to be the trades where Holly took them off the table for whatever reason, profit saved, the timed exit. But here's a good example. This one, timed exit, okay, RP. Holly made 25 cents in RP. There's our chart, there's our candle, there's our buy tag, and boom, some movement upwards, and then you see where the color gradient stops being so solid. That's where Holly exited it because the timed exit came into play. But if we want to calculate what does risk on mean in that trade, it's the same trade, same entry, but what's the final value at the end of the day with the bell ringing? So risk on is basically taking all the trades and then combining them, taking them into the bell and seeing what the P&L looks like at any given time, assuming they were still open. Okay, Brad said the color bands are calibrated on the time frame of the chart they're on. So on a daily chart, they're set for the next few days. Let's see if that's the case. I mean, right here on our daily chart, we've got color bands right there. They look like they're lining up pretty close to the intraday ones.
I think
Have you noticed that, Andy?
Well, no, I heard that was a plan going forward, but I haven't
Maybe
seen
it's a
that,
plan.
David. Yeah.
It might be a plan, David, yeah.
I'll put it on the 5-minute chart and see if it changes. Turn that 15 into a 5-minute, see what happens. No, they're the same.
Same levels. Yeah, they're going to be the same levels because they're looking backward in time for pivots, supports, and whatnot. Yeah, if that was on last Wednesday's webinar, there hasn't been much work done. So those guys are really good at teasing of what's coming down the road for the rest of us to handle. So maybe hold on for a week or two on that one, and when we know, we will let you know. All right, so that's pretty much all I got. Again, I just dropped the cloud links to the 8 marked up charts. Hopefully we have as much success on those this week as we did on the ones the last couple of weeks. But I kind of like this format, giving something out at the door prize for people for showing up. And that's it. So, all right, that's it. We're out of questions. Let's go ahead and bring Scott back.
Francois asked about risk on and risk off. So real quickly.
I thought I did.
I'm sorry. I'm sorry. I thought I've been probably answering another question.
Yeah, risk off on this trade was 25 cents. Let me go back to my time frame. Risk off was 25 cents, this little color band here, but then the rest of the color is a lighter shade and goes all the way into the close, and you can see the price went higher, so the risk on value for that particular trade was 65 cents in risk on mode. Okay. Risk off is quick hit, get in, get out, scalp. Risk on is see if we can let this thing work for us.
And hold it to the end of the day.
And a lot of times it gives us a pretty good indication of how the tides and the currents are flowing in the general market. If Holly's having great success with risk on in all her trades, then you should too on your trades or any trades you take along. It should be the same. All right, so let's put our slideshow back up and bring Scott in. Hello, Scott.
Hello, yeah, thank you. So on the way out, let's remind everyone that we have a podcast, and we traditionally release new episodes on Fridays, so get prepared for the next one by subscribing. Just search for Trade Ideas Podcast wherever you listen to your podcasts and hit the subscribe button. So you're ready to get the newest episode when they come out. You can explore the archives as well. We've got some real good guest spots on some of the past episodes, so check those out. Also, there's a good ebook that is essential for everyone to have, and both Steve and Andy contributed chapters, so go ahead and get a copy. It's free for y'all. Just go to trade-ideas.com/ebook and put in your email address to get the download link for you delivered to your email address. And inside the book, there's 5 strategies that are essential for you to navigate a rocky market. 5 ways to win in a post-BTFD market. So go ahead and get that if you haven't gotten it yet. We've got an event coming up in October. It's next month already. So October 20th, we're meeting here in San Diego. We've got some great A-list speakers coming, including Dr. Brett Steenbarger, J.C. Peretz, Brian Shannon. Some of our referral partners are coming in too to participate in panels. We might have some mystery guests. So find out more information at TradeIdeasEvent.com. It's also got some hotel recommendations there. Now, if you want to come and see us and see these great speakers and participate, now's the time to start getting those reservations going. So start investigating that. Go to TradeIdeasEvent.com and find out the details. We've got a sale going on all month long, September days. Just use that code, all caps, for 15% off your first month or year of Trade Ideas. This, at least for today and tomorrow, this can still be used on the upgrade path to change from standard to premium. We're probably going to make a change to how the upgrades work tomorrow afternoon after the close. So if you're going to use a code for an upgrade, just use it before then. Otherwise, the procedure might be slightly different. For now, if you want to hit that upgrade button from standard Trade Ideas to premium, you can just use this. Real easy. If you have any questions, email us info@trade-ideas.com. You can follow Steve Gomez on Twitter @TodayTrader. We also have @Trade Ideas and some other handles like Jamie Hodge is @QuantBot. Facebook.com/TradeIdeasPro is where to find us on Facebook to like our page so that you can see our updates and share that stuff with your buddies. Go ahead and email info@trade-ideas.com with any other questions. It goes into our help desk software. That's the place to go. We'll have a recording of this on available later on tonight or tomorrow morning, giving you an email update how to find it. Thanks, everyone. Thanks, Steve. Thanks, Andy.
All right. See you guys next time.
Later.
Thanks, everybody. I'll see you on Thursday.